What's going on, guys? So today I'm going to break down how I'm up currently $16,000+ trading gold, and also how I was able to make about $10,000+ last week trading gold. All you have to do is check out the link below and also check out my free community and also free live sessions where I give out these trade ideas and also the setups for free every single week. And on top of that, you can get some free courses right below. So let's break this down in depth with a simple strategy and let's get straight into it. So the first thing we're going to talk about here, which I would say is the most important, is going to be fundamentals. Fundamentals control 70% of every single market, regardless of whatever market it is. And a lot of people don't talk about this. I would say technicals is maybe about 30%. You find your entry, but fundamentals control everything else. Now, one thing that we have to keep in mind here was gold back in January or July of this year there was a specific law that was passed, and I'm pretty sure that law, if you could look this up, is called the HQLA law or Basel III law, that it basically stated that gold would be considered by the US government by rumor or by law a tier 1 asset, which means all banks would need to hold it, and it's considered just as good as money. And there was rumors of this law happening back in 2023 and 2024, which is what created gold to have this historic run. But now that law is officially, passed here in July, so you could obviously see some of the growth coming from that. Now, fundamentally, it's not the only reason why I got into gold, but if you actually look at where we are in terms of the state of like the economy overall, we're in a rate cutting cycle. And a rate cutting cycle long term when it comes to swing trading usually means that more rate cuts means lower interest rates. Lower interest rates means bank can give out loans to businesses, for a lower cost. That pumps up the economy with more money, which is able to have businesses give more money to people with jobs, make more money in revenue, and then that essentially grows the business. And when they're also cutting rates, they're also printing money, so that just pumps the market with just all this, fake money. When that happens, we know that the markets are going to go up regardless, not just because things are becoming more valuable like gold, but it's so simply because we're just printing more money and we are in that rate cycle here. So I predicted a lot of these rate cycles. I've talked a lot about them, but it was one of the main reasons why I've been bullish on gold all year. In the last 2 years, it's made me over $100,000. So it's not just on this trade. You could also look at some of the open interest volumes, and we could look at the COTs here on a perspective here. But that'll be for another video. And seasonalities also played a role on why I called buys back in like March, in June, July, and also October. But one of the most important ones, and I'm going to give you this one for today, is going to be the gold ETF inflows. So if we're looking here at the reports, we can actually see institutions accumulating, and specifically more BlackRock actually accumulating more gold than normal in terms of inflows. And what I've noticed recently, as Bitcoin was going down earlier this year, or it was in a retracement, I saw that BlackRock was actually accumulating way more gold than normal and dumping their Bitcoin to acquire more gold. Just my consideration is because it's a safer haven asset. But if you look at, BlackRock, it's just been buying gold consistently other than just May alone this entire year here. So you can kind of check this out and see the inflows. My biggest thing was what happened, I would say, earlier this year. So when we had that dump in gold in May, I believed it was a huge just dump manipulation by institutions. And this is when I called out buys for my entire group. We saw the impulse and then the correctional move happen here in August of 2020, where I called more buys. And because I was pretty, you usually have 2 cycles in a year when it comes to swing trading. So I was pretty confident that we were going to have the low was going to come in May and June. We were going to have a run up. We were going to have a retracement. And I knew that, usually markets get bullish seasonality wise in September and October. So that's why I called this out to my group. And the inflows were going to get to the same levels as, particularly that we saw in March and April, about 4 million in inflows in ounces. That's why I called some buys here. I mean, it was very, very easy, very simple trade here. I've made multiple 6 figures with gold just using some of the institutional inflows and just following what the institutions are doing here. So that was the first thing. I would say fundamentals for me, understanding sentiment, and me breaking this more in depth. If you want more of this information, I give it out for free in my group, so I can give that to you guys. The other thing was structure here. So if we actually take a look at market structure on a daily perspective, look at this here, right? We're on a consistent impulse move to the upside and with no real, I would say, turnaround here. And it's because of that law. that passed in 2025, which is full-blown fundamentals. I know a lot of people that were shorting this, specifically like retail guys, they were losing a lot of money because they just didn't know what was happening, but they don't understand how like institutional ETFs really work. And also they don't understand the fundamentals that are happening with gold, which is what's moving the price. So the other thing that I would say, like I said, is structure, right? So we're in an uptrend, and in a normal uptrend, you're never going to want to sell against the trend, right? So in a trend, it's very simple. Okay, I'll give you guys a perspective here. We have a higher high, higher low, higher high being created, higher low being created, higher high being created, higher low being created. So when we're in an uptrend and the market's moving to the upside, you never want to guess the top or you never want to guess the bottom. You always want to be in the middle, but you always want to enter on these areas, the retracements here, right? The retracements. This is where you want to always enter, right? Buy low and sell high. But as long as we're on the upside, you never want to try to guess the top or the bottom or ever trade against the trend. You never want to sell something that's moving to the upside long term. It's just very dangerous and stupid to do. So what I also looked at was structure, right? We're on a bullish structure here. So all I'm going to be looking for is buys. Now, were there opportunities for me to sell? Yes, there were, but the risk to reward, right? RR was not worth doing that. Okay, the risk to reward for me to sell is not worth me taking the loss. Why? Because if I'm on an upward structured trend, my risk to rewards are going to be anywhere between, 1 to 3, 1 to 5s, 1 to 10s, right? Which is what makes me profitable long term versus, having, small risk to rewards, right? If I would decided to short it, right? Because if I come here, I could have a longer or a higher risk to reward of like, let's say a 1 to 5 or a 1 to 10. But if I were to short it, right, I'm playing the guessing game here and my risk to reward is going to be a lot smaller. And I would probably, instead of going for 1 to 5s, I'd only go for like 1 to 2s and 1 to 3s, which I would say amateurs do. And you never want to have anything below a 1 to 3. Because reality is you're just not going to be profitable and the market's going to eat you alive. So structure was the second thing that I was looking for. And for me, what I always am looking at with gold is where is the structure going in this particular moment in time? So, long term, we can kind of see just on the 2-day chart, we had a bit of order flow that peaked here in April. A lot of markets peak usually around that time. And then you had this consistent order flow or this kind of wedge that was going back and forth in reaccumulation here. Okay, that reaccumulation then eventually broke structure and broke out here back in August. Okay, after the news had kind of passed of that law that we talked about earlier. Now, so structure was the first thing. I was only looking for buys, so I ended up actually buying gold and making $16,000 to about $20,000 here, and here, just off my entries. But the reality was, I've actually been in gold actually back here at 33.55 and also 33.13. You can check it out on my live streams. I was calling some buys there. Now, for me, I want to look at structure, and I was just following structure. Okay, there was a couple times here that I was stopped out back and forth, but I'm always following structure. So whenever you're in this trend, following the structure is the key, and you want to find that structure externally on a higher time frame. So the higher time frame is going to be like anything between external structure is going to be the 4-hour to the weekly time frame, right? That's going to be the perfect area to find that external structure when you're swinging. Now, if for entries you're going to look for that on the 1 hour and sometimes internal structure, which is internal is considered, so internal structure is usually considered anywhere between the 15-minute, and the 3-hour. That's internal structure. So you're only going to look for structure on a higher external time frame, and then you're going to look for it on an internal time frame. So you're going to look for your entry on an internal time frame. So that's what kind of helped me here. So if you look at fundamentals, I already knew, I had a bias that with fundamentals we were bullish, right? We were going to go to the upside. Structure is bullish, right? So if you could see this here, I was already in buys here below earlier, but I saw that we were still consistently following structure, right? We were following structure, and I was just getting into some of the pullbacks here, right? This is a pullback here in this location on the daily. This is a pullback here, which is the entry of the first trade that you're seeing from my profits. This was a pullback on the daily as well, right? Let me zoom in here just a little bit. This is a pullback here. This is a pullback here. This is a pullback here on the daily. So I was able to get into all the daily structural pullbacks here and here, right? And I did that by just simply understanding, hey, right, I want to trade structure. Now, the next thing would be for me to look for an institutional candle, right? Guys, we're pretty aware of this. I don't trade any type of retail concepts. The whole support and resistance stuff, I don't do. I believe it's bullcrap, because what these institutions will do is, you know, JP Morgan, Goldman Sachs, they'll donate billions of dollars, okay, every single year, just so to all these companies so they can teach you these concepts called retail concepts. And the whole idea is if there's like a double top, right? That's the whole retail idea. Hey, you should buy at the double bottom because you're going to make money. Now, these institutions, guys, remember, Goldman Sachs, JP Morgan, they have billions of dollars. So they're teaching everybody, 70 to 90% of people, how to trade. And they want you to trade their way because guess what? They are the liquidity providers. They know your data. So they know where the majority of people are buying and selling. And what they'll do is instead, they'll see that you're looking at a double bottom. You're seeing price come back down. You think it's a support level, okay? They'll manipulate price against you, have your stop loss hit, so you lose out on the trade, and then move the market in the direction that they want it to. Okay, this is considered what? This is considered market manipulation or price. So my strategy isn't based off of any type of retail concepts. I believe retail concepts are just garbage. They're not real. Markets don't move in a market just because they respect a line on a chart. Okay, the markets move because of institutions. Simple supply and demand. It doesn't move just because, hey guys, there's a trend line or there's all this. So that whole idea is bullshit and it's garbage. So you don't want to be trading that retail. If you are, then you're already kind of falling behind. What you want to look for are institutional candles. Well, how do you find institutional candles, John? I'm going to show you guys some institutional candles, because what these institutions will do is they'll go out there and they'll actually buy up price. They'll buy, you know, a certain commodity or a certain asset for a certain price. And then what they'll do is they can't buy up all of it at one time. They'll have to hide their orders. So what they'll do is they'll bring price back down. They'll buy and sell at the same time, break even their orders, okay? And then what? And then obviously once they break even an order, they'll buy some more. So they hide a lot of their orders by slowly, you know, scaling into certain assets. And then also they can hide their orders by buying and selling at the same time and then breaking even their orders as they come down. So a great example of this is like, let's say an institution will buy $10 million or $10 billion worth of gold. They'll buy it, it'll move price up and peak it, but they'll buy 10 million and then also sell, like, let's say 7 billion, right? Let's just say a hypothetical standpoint. Okay, this is not real money. We're just saying hypothetically, right? So let's say they do that. They move price to the upside here. Okay, we get to this zone here, and now they start selling another, let's say, who knows, just to bring price back down. Let's say they sell now 7 billion, okay? And then what they do is they also buy up like another 5 billion or something like that, okay? What they'll do is they'll then bring price down and slowly bring price down. They'll break even, okay, this $7 billion sell that happened right here, okay? And then eventually buy in again and move price to the upside, okay? So it'll create what? More demand and move price to the upside. And then eventually they'll break even this sell here, okay? They're constantly doing this here, okay, on a consistent basis. And you can see this live in the charts. So most of my areas are going to be around areas of institutional areas. And if you want a free course on this, all you got to do is click on my free community and I give you a free course on how to identify these institutional candles here. But one of the reasons why I was able to come and get into the first entry that I got in swinging was because I saw an institutional candle here, okay, on a higher and then also lower time frame, right? So me seeing that institutional candle and seeing, okay, that swipe of liquidity here, You see that? Swipe of liquidity, swipe of liquidity. It gave me the ability to obviously look into this and buy. But mostly I wasn't just looking at the 1 hour for entry. I was looking at the 4 hour for, okay, confirmation with structure. Notice that structure never got broken here on the 4 hour, which is why it gave me a lot of confidence, okay, that we were gonna buy this out. And I actually marked this up for free, okay, in my live sessions that you guys can check out. Okay, once that happened, I was up a couple $1,000s. I think I was up only like 2 or 3K. And I saw this extend to the upside here on the 4 hour. Now for me, I was gonna take profits here, but I was very aware of what? I was very aware that this thing broke structure here and went to the 2.618 level, okay, which is I would say a big level in Fibonacci here on my Fib tool. And what I thought was, okay, well, this thing right here is on an uptrend. We're in September. We're not even in the October, and ETF flows, okay, are at an absolute low here. I'm like, we're not even anywhere near, okay, the highs that were in April. So I know where BlackRock is buying. They're buying right now, so we're nowhere near this, okay? And then I looked at, obviously volume, open interest as well, and I saw some other indicators on a fundamental level that told me this thing is gonna get a rocket to the moon. So what I ended up doing was I ended up waiting, and I called this out on my session as well. Again, I ended up looking at another area, this specific area, 37.27 here for another institutional candle, and then buying back up in that area again, right? And I took my Fib level and I saw it, and I particularly wanted to take profit again, okay, at 38, 39. I think I was up another couple thousand, but I really didn't care because I knew what my aim for it was about 4,000. And the reason I knew that was because of ETF flows. It wasn't because I was just guessing here or I was looking at technicals. It's all based off fundamentals. So there was some other fundamental indicators as well that I can make another video on, but I'm not gonna break that down here because this will be like 3 hours. But the next breakdown that I saw here in the next, buy that I actually took was right here in this zone around 38.23. And again, the reason I did that was because I saw another institutional candle, okay? So I saw an institutional candle around there. We ended up taking a buy. And then I saw another area of an institutional candle right here on a lower time frame that gave me the idea to buy up again. And I was still aiming for that 4,000 area. I wanted to buy up even more here at 39.42. But I think I fell asleep this morning, or I overslept and I got sick, guys, so I just didn't do it, or I did. I can't remember, on a different account. But yeah, we ended up moving to the upside here. Now, as I'm recording this right now, I'm currently down a bit from the 16,000. What I'm actually looking for potentially now is a short with gold and looking to take profit on some of these positions here. So I'm going to give you guys and keep you updated on that as well. But again, the reason why we were able to do that was because of what? Was because of the institutional candles that I was able to locate. So finding those institutional candles were the third reason why I was able to do it. The other thing is going to be timing here. So, there's institutional numbers that you're going to want to take a look at. And if you, like I said, you want access to that, all you got to do is click the link below and I'll give you a free course on how to find institutional numbers in the market. But most importantly, there's institutional time, okay, that you need to pay attention to with gold. Gold specifically, gold futures opens up at 7 a.m. in the morning, okay? That's very important for you to know because it's actually open before, okay, the 8 a.m. New York session. So you have to be aware there's a lot of volatility that happens with gold even before 8 a.m. But timing is very important too because there's specific times with gold that it will move at exactly at a specific moment. You know how like the New York Stock Exchange opens out, or the open bell happens at 9:30 a.m. Sometimes gold, okay, will do its reversal at 9:30 a.m. Sometimes it'll happen earlier. Sometimes it'll happen later. So timing, okay, plays a huge role into this. You have to identify the institutional times. If you want all of that, all you gotta do is click, like I said, go in the free community. I give you guys the institutional times on where to find it. Okay, it's simple, but when you know where the institutional times are, it's almost like a playground to make money off of gold. And the bonus would be looking for the liquidity sweeps and maybe looking at an indicator like, let's say, volume here. Volume bars, it gave me a little bit of an idea of wanting to buy gold as well, because I saw that the volume started to spike here, okay, on a lower time frame and on a higher time frame. But volume bars were just going through the roof here, even on the 4 hour, which to me was the most important. Even when we had some bearish volume, gold was still pushing through. And that meant that regardless of how much bearish volume we were getting, okay, gold was still very resilient. And to me, even when we have that much bearish volume and we don't see a break of structure, it means that gold is very, very resilient here. So these were the 5 things that I saw that I looked for that helped me make this money here, and also helped me make, more than just, I would say 16K, make me make 6 figures more plus with gold specifically, guys. So like I said, take a look at this here. If you need to review this video, you can go back to it a couple times here. It'll be able to help you out. Okay, if you want more of an in-depth breakdown, all you got to do is shoot me over a message. Okay, or there should be 2 links below, one of a free community that you can get access, or one to work with me one-on-one. I'll be able to showcase to you guys one-on-one how to be able to do this. Also give you another masterclass here that you could use in your free time. So make sure that you take a look at these things. Make sure that you're always looking at it because it'll help you with different types of setups here. And I'll see you guys in the next video. Have a good one. Peace.